Global property forecasting. Asia is heading the market for the next 4 to 5 years. You see the light blue bar, followed by Australia, and then UK and the rest of the world. And for sure there is, in the year 2009, the Central Eastern Europe, but also the US effect and Asia effect. Again, the total joint projections are becoming increasingly better, and this is again a positive message for all of us. Here, it's interesting. I don't want to bore with all these numbers and figures, but obviously if you try to build up a strategy, I have to mention this, sorry again, let's go to Asia, but depending if there is really a mature market in Asia beside of Japan, this is again a question that Asia is for sure quite attractive. The global paradigm change in this cycle, and starting with the year 2003 up to 2008, we see slightly and then a rapid movement coming from the core mature activities, markets, to the opportunistic things. I think, honestly speaking, the year 2007, this was a so impressive MIPIM year. We saw people I've never saw before, not here at the fair, but here in the cafe, and well, wait for investors and other investors and people who had just big portfolios, up to, let's say, starting with 500 millions. I don't find something here who want to sell 500 millions on that. Nevertheless, what we saw and what we'll see much more, and this, sorry for saying that, this could come much more in a pessimistic scenario. Whenever you talk to the people here, most of them are crying for core, super core. I call it sometimes hardcore. Why always core? It's a reflection of what we saw the last 5 years. And this, again, is not a healthy signal. If about 90% of all the predictions and announcements going into the real estate world is core, there is no core anymore for that massive wall of announcements. It could be also liquidity, nevertheless. So it's for sure a global paradigm and the change in the cycle that we will see much more of these core and a little bit value-add driven things. I think the global economy recovery continues. This is a convinced story for all of us. That remains a problem for sure, but please bear also the case for Japan in your mind. Returns to be driven essentially by income growth. Again, look for the cash flow activities. And for sure, it's important to focus on long-term fundamentals. I don't quote any demographic changes, but this will cause much more the markets in future than we probably see these days.
Before I get to what we heard this year, I want to remind you what we'd heard last year. This is the second year we do this with MIPIM. The key messages that came out last year from our conversations was, the first point was last year was all about trying to survive in the fog. And so where are we today? The way we feel the mood is we've made it, we've survived. But let me remind you about the sample selection. The non-survivors were not invited to come to MIPIM. So of course, these are the ones left. And maybe a sense in which the sun is rising. It's very much rising in the east. We talked about Hong Kong and China. And Poland was a guest of honor. They are to the east of here. And from what I hear, there have been some major transactions happening with Poland. So maybe the sun is continuing to rise and even pretty soon shining over us. Still strong, lots of weakness in the leasing market. What I hear, what you told us is I don't know about Russia, but there is a certain interest in Brazil, India, and China. The missing debt markets, the banks are not back. There is no lending available for non-core assets. And there's also that whole large deal part of the business. Plenty of uncertainty remains. We see the sun rising, but it's still that fog in the morning. And really the fundamental issue is we know that there's enormous debt refinancing that needs to take place, in particular in the US, over the next 3-4 years. And there's deleveraging that needs to take place now. So MIPIM in this context, so we have our own indicators. When I come here with my students, I try to get them into private parties. This year it was really tough. Because the parties were smaller, and when I have my rent-a-crowd service with 15 people, that was a bit too much for most of my usual parties. So we did get a few invitations. So smaller parties is our first indicator. The second indicator, however, is among the parties, I do like champagne, and I try to get them into parties with free champagne. Actually, that was easier this year. So smaller parties, but better celebration. 3 champagne this year, 1 last year.
Totally agree.
And then my last indicator is every year when we are here, I try to schedule a few private meetings with friends in the industry, leaders who have good points to make to my students. And it's the first year in my 6 years that they didn't arrive to my meeting, which my meeting brings no money, I guarantee it. They didn't arrive late, and they didn't run before the end of the appointment. And I don't know what this says about the mood of the market. In 2007, nobody arrived on time. Now, beyond this, we did a few extra efforts to get you about a picture of what was going on. We asked participants, so 2 categories, the attendees, these are people we met just because they were walking around next to one of our students, and then the booth. We actually went through every booth to ask the same questions. How has MIPIM changed your outlook? More pessimistic, same, and more optimistic. And here, I would point out how much happier the booth people are from their experience here than the attendees, and maybe the attendees should take note and next year spend more time on the booth, because that's where the happiness seems to be. So to conclude, what have we learned? In 2009, 2 of the key highlights, green is sustainability and real estate remains an asset class, so 2 more comments going on, adding to what we learned this year. Sustainability is everywhere. I mean, it's no longer just 1 or 2 or 3 countries taking the lead, but everyone is talking about it. And at the same time, it is accelerating obsolescence. So we want to have a sustainable environment where things last a long time, but actually we're just making what we had already no longer useful.
But if I just may jump in
Please.
here, I think the main thing for us as investors is where is the economical proof of all the sustainability? For sure, on one side, rescue the planet. I totally agree on that. Puzzle. No SUV. On the other hand, where is the economic proof for buying or purchasing a property? What is the discount, or vice versa?
Yeah.
This is again a situation where we're wobbling, struggling in the middle, where you see during our and your surveys a lot of optimism on that. On the other hand, again, where is the proof of this thing?
Yeah. So my guess is going to come in 2 ways. Either you're going to be taxed for not doing it.
That's it.
And maybe they would not just use the stick, they also use a carrot, which is release that height restriction in exchange for you doing a green building. And I would say that they understand the trade-off. Yeah. And the second point I had mentioned, real estate remaining an asset class despite the crash. It's still worrying me a little bit today. I mean, we do see portfolio allocation still driving capital flows, but I'm not sure that the pricing is driven by portfolio allocation. And I just wanted to remind you that we all felt, I think we all understand today, that the crisis and the boom came in a large part because of mispricing of risk. It was mispricing at the risky end of the spectrum, those subprime mortgages, for example. And today I see so much premium attached to a limited downside. And I have an academic explanation, but my friends investors tell me, just forget that. It's just the silliness is back, and I'll let you decide. What I would point out is that on a low-risk property, we can also misprice the risk, right? It's not because we are minimizing the risk that we are not making the same mistake we did before, just on different spectrum of assets. And then, in the US, we love giving lessons to the others, particularly to Japanese, about how they should get out of their lost decades. What I've noticed is that the UK led the way down by marking to market very aggressively. One might argue maybe too much, but what we know now, we saw in this graph, they are picking up. The others, we are still trying to give lessons. We still have plenty of zombies. And just to clarify, in case this is an American expression, zombies meaning companies that if they were to mark to market, they would have no equity left.